Happy day. This is Amirtha Varshini DE, Assistant Professor, Department of Commerce, BCom Accounting and Finance, Shift 2. I am here to present a topic on stock and data system under branch accounts. So branch accounts, what is branch accounts? The word branch means that it is an offshoot of an head office of the company. So all the companies, in order to expand their business, will establish branches at different areas. So how are we going to make accounts for these branch is all about branch accounts. So why do we need branch accounts? Whenever we have branch accounts, we can easily ascertain the profit and losses that are under each and every branch. We can know what are all the requirements of the branch and also the financial position of the company on a whole, considering all the branches can be found out. This will also give us some suggestions in order to increase the efficiency of each and every branch. Types of branch. Under branch, we have many types which are dependent branches, independent branches and foreign branches. So, dependent branches are wholly dependent on the head office for all its operational policies. They do not maintain a separate account for themselves and these branch accounts are maintained by the head office. Independent branches have the eligibility to operate on its own, to have a factory on its own and to make some decisions which will fall under the formalities of the head office. Then foreign branches. Some companies also open branches in foreign countries in order to expand their business. So today we are going to concentrate on dependent branches. Why do we have a dependent branches? The main three purposes of having a dependent branches is the first one is to take orders. These branches will concentrate only on taking orders from the customers and these orders will be transferred to the head office and it will be executed by the head office as a commercial center. So the factory and the head office will be in some other place. A new branch will be opened just as a commercial center to make wholesale sales for all the goods that are produced by the company. And retail sale of goods. As we all know, these are just the retail showrooms which are in a place away from the factory in order to showcase their goods and to sell them. So there are different accounting treatments under the dependent branches. They are data system, stock and data system, wholesale branch system and final account system. Under this, we are going to concentrate on stock and data system today. So as the name says, it deals about the stock, that is the amount of goods that are stored by the branch in order to sell it to the customers, and the debtors. Debtors are the customers who are obliged to pay something back to the company for their credit sales. Only a single branch account is prepared where all the transactions of that branch account is under that one single account. But in the case of stock and data system, different accounts are prepared for various types of transactions under this branch. So here we have the list of accounts that are to be prepared under the stock and data system. They are branch stock account, branch data account, branch expenses account, branch adjustment account, which is to be prepared only when the goods are transferred in the invoice prices, branch profit and loss account and goods sent to branch account. Branch stock account. It deals all about what are all the goods that are received by the branch from the head office, how much amount of goods they are returning to the head office and how much amount of goods is sold to the customers. So what are all we have to debit and credit. Opening stock has to be debited and closing stock has to be debited. Why? Because in the case of assets, always the opening stock has to be debited and the closing stock has to be credited. And after that, goods sent to branch. Goods sent to branch means that the branch is receiving the goods. So, as per the golden rules of accounts, under real account, whatever we receive, we are going to what comes in is debited. And goods returned by the debtors. Again, from the debtors, as sales returned, we are receiving back the goods. So, it is debited. And surplus in stock. When we have more stock, the goods stay with us. So, it is also debited. Coming to the credit side, cash sales. Always sales is credited and here also it is credited as the goods move away from the branch. credit sales. So here we give the goods to the customers on credit basis, and those customers become our debtors and they have to pay back the amount after some time. And goods spoiled and lost, here also the goods are going away from the branch. Goods returned to head office. Again the same, the goods are going from the branch to the head office. So it is credited, and at last comes the closing stock. The next account that is to be prepared is branch debtors account. So debtors is also a part of assets. So the opening balance is debited and the closing balance is credited. Credit sales. Under credit sales, the debtors will receive the goods, but they are not paying anything back at that time. So what comes in is debited here. So credit sales comes on debit side, and on the credit sale, cash received from the debtors. So the debtors are going to pay the money back to us. So in this case, it is credited. As we say under personal accounts that debit the receiver and credit the giver. Sales returned. So sales return was debited in the branch stock account. So as a counter entry, it will be credited in the branch debtors account. And bad debts, allowances and discount allowed. All these things are like gains for the debtors as they are gaining something from this. As per nominal account, we'll debit all expenses and losses and credit all incomes and gains. So it is given on the credit side. So this totally deals about what are all the balances that we have, the opening balance and closing balance of debtors, the credit sales that we are going to make, and the cash received back from the debtors. The next account that has to be prepared is branch expenses account. So as per the rules of nominal accounts, we will debit all expenses and losses and will credit all incomes and gains. So what are all the expenses made by the branch? That is providing any allowances to the debtors, giving discounts to the debtors, or any other charges that is related to the branch, everything will come on the debit side. And the balance will be transferred to the branch profit and loss account, and it goes on the credit side. If we have some other incomes or gains in the branch, then it can form a part of the credit side. So the next account to be prepared is branch adjustment account. So as I said before, this account will be prepared only in the case of sending the goods in the invoice price. Invoice price is nothing but it is selling price. So here we concentrate on the transit of goods, the stock, reserves and surplus. Stock reserve is a liability. So the closing stock is on the debit side and the opening stock is on the credit side. And profit elements of stock shortages. When we have some shortages, it is like a loss for us. So it is on the debit side. And value of loss in weight. If some theft happens, if some damages happen to the goods, it will be a loss for us. So it is on the debit side. And on the credit side, after the opening stock, we have loading on goods sent on branch. So it means that the branch already has something in loading. So it is like a surplus and it is on the credit side. And profit element of stock surplus. So surplus is always a gain, so it is on the credit side. So the next account is branch profit and loss account. So this will contain the balances from all the other accounts, and we will be finding out the net profit or net loss from this account. So the first item to be debited is balance of branch expenses account. As we saw in branch expenses account, all the expenses will be on the debit side and the balance was on the credit side. So we are transferring it on the debit side. And cost of goods lost. So whenever our goods gets lost, it is a loss for us, so it comes on the debit side. And on the credit side, we have gross profit. This gross profit is derived from the branch adjustments account, which we have done before. So that will be on the credit side. And cost of surplus, whatever surplus we have, it is on the credit side. And any insurance claim that we receive from the insurance company, it is like a gain for us, so it comes on the credit side. The last account to be prepared is goods sent to branch account. So this is all about only goods, that is how much goods is sent, how much is returned, and this amount, the balancing figure, will be transferred to the purchase account or trading account of the head office of the company. For example, if the company is just a selling company, it will be transferred to the purchase account, as we first purchase the products and then only we can send to the branch. And if it is a manufacturing company, it will be sent to the trading account, where we talk about the wages, direct labor, manufacturing expenses, all those things. So I hope this video would be useful for your preparations. Thank you.